Insurance Business TV was recently in San Diego attending the WSIA Annual Marketplace Conference. Whilst there, we caught up with leading insurance professionals who addressed some of the top challenges the industry is facing today.
Been quite a few over the last several years. When I think about cat handling and some of the lessons learned and ways to improve, go back to, starts with data, and it typically ends with data. The data going in on the front end, exposure data from underwriting over to the claims department or the TPA is critical in securing the appropriate resources to address the cat. So for example, it could be as simple as a list of risks within the cone of impact, the expected cone, or it could be advanced modeling. Either way, getting the information into the hands of the claim team is critical for the event to get off to a proper start. So could include lists of accounts within a certain geographic area, would include total insured value, TIVs. It would include building number and locations, number of buildings, number of risks within the zone. All those data points are critical in allowing the claim department or the TPA to get ready for the cat and secure the necessary resources, because the last thing you want in preparing for an event, a large event in particular, is to have bottlenecks in the claim handling process. Once you get behind, it's very difficult to recover. So we found that over the years, it's better to go big on securing resources. And when I talk about resources, I'm talking about field adjusters, engineers, other assorted experts that would be needed in a large property loss event. So really, it begins and ends with data. And the other piece of the equation is, and every carrier, syndicate, underwriter wants to know, once an event happens, they want to get to the number, whatever it's going to be. And after years in claims, I realized that's the first question, and sometimes asked somewhat prematurely, but yet we still need to answer it. So the best way to do that is to rely on historical data and going back through the history. Claims departments keep great records. I know my organization keeps great records, and we have mountains and mountains of data on prior events. So you'll look for an analog for the current event, something quite similar. So for example, we see a hurricane approaching Gulf Coast, Louisiana. We go back in the records and we see, we had one in 2018, we had one in 2019. Which one, in terms of strength, most appropriately matches the current threat? Once you have that information, you go back and look at the actual results from that loss, and you apply some certain modifiers to make sure to keep it current. Differences in underwriting, differences in deductibles, differences in state regulations and compliance if they have changed. You look at inflationary factors as well, and then you apply those to the current expected volume based on those lists that you obtained up front, and you make your best guess. Average claim, look at that and apply that to the current, and you come up with a number. We've noticed that getting to that number is super important, because nobody likes to talk about adverse reserve development in a property event. So the quicker you can get to terminal reserve, the better off and the happier everyone will be. We've noticed that when you do apply historical data and you act proactively in advance and you try to get to the number quicker, the results are far better. Typically, in my experience, we're able to get to 90% of the actual terminal reserve combined within 90 days. If you get all the other data points aligned, and if you secure the resources, you handle the claims as quickly as possible. So really, it's data, it's compliance, and it's getting to the number. Of course, go back to 2017, we had Irma and Harvey. Those were very large events, industry-wide. It was very difficult for the industry to keep up. More recently, I would say Hurricane Ida was difficult or challenging because it caught the industry by surprise. It was a large hurricane, came in the Gulf Coast, Louisiana, did what the hurricanes do. I think it was a Cat 3 or 4. So it was significant wind damage along the coast. When it did something that no one expected, and it kept going up the eastern coast of the US, and it turned into a major flood event in the Northeast, of New Jersey, New York, New England. And so you really had two events in one. And so what the industry learned from that is expect the unexpected. Which you could have a wind event up front, turn into a flood event, make sure that you have the necessary resources on standby to address. Major lesson learned there.